Hey everyone, welcome back to the lesson of your potential future with investing and a practical example. So we'll be going over here calculating your future and how it can look like. So, just a quick recap. Remember, the outcome from this course is at the end of the course, you'll have a knowledge to become a lifelong investor. You'll have all the tools you need to start investing, and you'll have built the habit to start building your wealth. So, with solid investment strategies, financial habits for the long term, confidence in your own ability, as well as additional bonuses from us that you'll see at the end of the course. Just a quick spoiler alert, it might actually save you a lot of money in taxes and years of work from your life, and your success will depend on your effort. But remember, 90% of the effort is just achieving the milestone one that we did earlier in this course, which is the actual creation of your account and going through the verification process and depositing that first amount, that first 100 or 500 euros or dollars or whatever currency that you're working with, making that first commitment, because that is what's going to force you to become a successful investor and really succeed in building long-term wealth. So, recap, how much money will I make from investing? You've already seen this slide before. It's a recap from our introduction video. Remember, the good number to base your head around is 9% per year based upon the last 50 years in global stocks. Don't think about trying to get rich quick. Stop thinking like a poor person. Let's remember what 9% interest does. So we had the compound interest power demonstrated to us with a practical exercise, and we'll be mimicking what we're just going to show you right now with your own calculation and how to actually do it. So remember the power of 9% compound interest. It starts slow, but then it starts growing exponentially, and it starts growing this hockey stick growth. So with 9%, your original investment will have grown by 13 times by year 30. So we'll go through this not with just a fixed amount of 10,000 euros at the beginning. We'll go through this in your own personal situation and how you can calculate it for yourself. So yeah, we know that the best way to get rich is to invest and multiply every dollar or euro or pound that you earned with compound interest. We know all this. We know in the short term it'll rise and fall and be volatile, but over the long term it will increase. So okay, let's actually open up the calculator. So I will go through an example first, but then in the next lesson, the second milestone for you in this course will be to do the same simulation for your own case so that you can build the vision for yourself of how your investing future can look like. So let's go here. You can either just take this URL and put it into your browser yourself to go straight to the web page, or I will also just leave a link to the calculator site in the description below, so you can just click on that and it'll go you straight to it. It's also usually the second or third top result when you Google compound interest calculator or investment calculator. So anyways, let's go through. Yeah, get this page where we'll have the calculator, but you can also, as mentioned, just type in compound interest calculator, and it's result number 3 here. I like it the most because, in my opinion, it's the best. It's the best that there is. And okay, so now we're on the page, and we can go through the same scenario where I will invest my initial 10,000 euros, but you can set this to whatever number that you have in your bank account already that you want to just invest directly. So whether that's 1,000 euros, 100 euros, 200 euros, 20,000, 50,000, whatever it is, you can just put it into here as the initial investment. You will then set the yearly interest rate. So this is the compound interest to 9% yearly. You could theoretically just set this interest to whatever you want. So, if you're a little bit more bullish, bullish means more positive. You can also set it to 10%, 11%, depending on the market that you're investing in. They sometimes have different historical averages, but just for conservative reasons, let's just set it to 9%, as that's based on the general broad world over the last 50 years. I think it's a relatively conservative number to start with. And let's set our investing horizon to 30 years. As to be honest, I think I personally will only be working for the next 30 years or contributing for the next 30 years, but you can set this to whatever year amount that you want. If you're close to retirement, you can set it to, I don't know, 10 years, 20 years, depends how long you want to just keep contributing. And then what you'll want to put here is the amount that you want to deposit each month. So let's say back then I was earning around 4,000 euros monthly after tax. So with 4,000, let's assume that I would save 10% of my net income. So instead of 4,000, this becomes 400 euros monthly, and I'm saving a relatively. Okay, so assuming I save around 10%, but 10% is a relatively conservative amount, and I think that everyone on this course should be able to save at least 10%. If you don't think you can save 10% if you're earning above basic necessities, then to be honest, you're kind of lying to yourself. So 10% should be achievable by everyone. And some people that even go more aggressive and save 20% would be considered moderate saving. And then anything beyond that, so 30-40% would be a lot more aggressive saving. But 10%, let's say, is a good number here, a very conservative and low number, which based on 4,000 net income is 400 euros. And here is an optional thing to do, which is annual deposit increase. In short, this basically means how much do you expect your income to increase over time. If I want to stay consistent and assume that I will continue to invest 10% of whatever my income is, if my income goes from 4,000 euros per month to, in 5 years' time, 10,000 euros per month, I'm not going to want to keep contributing only 400 euros. I will want to keep contributing 10% of my income. So 10% of 10,000 would be 1,000. So a way that you can automatically bake this into your calculations, that you will always contribute 10% or 20% or whatever, is assuming a percentage deposit increase. So I will just, let's say for conservative reasons, I will assume that my general income each year will increase by 4%, which I think is a very conservative estimate, but a good estimate to make for people that want to stay conservative. Inflation is generally targeted at 2-3%. In recent years, we've seen it could be a lot higher, but for the future, let's just continue to assume 2%. And then let's also assume that over time, your skills and your experience increase, and therefore your income will also increase. So we'll want a little bit of a additional percentage beyond, like above of inflation, to have your general income grow. So 4% is a really low number. In reality, probably for a lot of people watching this, you'll expect your income to increase by maybe 7, 8, 10, or even 15 per year. But just for the purpose of this lesson, I'm going to set it to 4%, super conservative. My income will barely grow above inflation just for the purpose of this lesson. And once you calculate it, you'll then have your future investment value. So that's what is the final amount of your investment by the end of the 30 years. How much will your investment have grown by? So there's 1.2 million. If I can keep contributing 10% of my income each month with a starting investment of 10,000 euros. And what we'll see here is total interest earned and additional deposits. Additional deposits means the actual amount that I contribute myself from my paycheck. And then the total interest earned is this 9% that's been accumulating over time, and growing by itself. You can see it in table format here, but this is, to be honest, quite tough to visualize what this means. So instead, just go into the graph format here, and this becomes way simpler to understand. So you see here the years, the time horizons over the 30 years. You'll see here the total amount of the portfolio. And you see here in blue, the amount that I contribute myself. This goes up in a consistent fashion. And then this in orange here is the accrued interest. It's the compound interest that grows over itself. And you can see here, it grows like a hockey stick. My deposits stay flat. So, this could be pretty much similar of what you would do if you were just to save in a bank and you just don't let it grow at all. And in orange, you'll see how much is growing just from compound interest itself. Now, with whatever your assumptions are, it's say if, I don't know, you're a little bit more or let's say you're a little bit less wealthy in terms of starting capital. Let's say it's just 5,000. Let's just stick to 9%, but we could actually even increase to 10% just to let you know how it works. Keep it to the same 30 years. And let's say I want to invest more aggressively. So instead of saving only 10% of my income, I want to save 20% of my 4,000 euro monthly income. So I increase it to 800 monthly. And I'll assume a little bit more aggressively that, hey, I expect to get promotions over the years. I expect my income to grow over the years, or my business will grow over the years. And I'll assume my average annual wage increase will, let's say, be 10%. Now you can just click calculate, and then the graph will update accordingly. So if I double my monthly contributions and I assume a better increase in my annual average salary or my income, whether it's for my business, my future investment now increases to 5.2 million. You can see here the amount that's earned via compound interest, the amount that I deposited directly myself, and you can see here the graph. So you can see here the massive hockey stick increase. And you can see here if I increase this percentage number here, of how much my own wage will expect to grow, and therefore the amount that I deposit into investing myself. You can see here that not just the orange section of accrued interest will grow exponentially, but also your deposits will start to grow more and more exponentially as a hockey stick as you increase your deposits more and more. And therefore, the split between the additional deposits and total interest earned will favor your additional deposits a little bit more. But in the end, it's basically the whole point of this is to demonstrate to you how your future looks like. So 15% is very aggressive in this case. I would suggest maybe 4 or 6%. Just calculate for yourself, for your own future, how much you expect your income to actually increase from your future plans for your job or whatever. 4% is super conservative. You could go with something like 6% instead. Set the monthly amount based on your current income right now. If you want to save 10%, 20%. The whole point of this is just for you to be able to calculate what your future life may look like after your investing of 30 years. Again, you can set this to whatever time horizon you like. This is just what I use and is very helpful to sort of set a goal or set a visualization of what you can achieve. Okay, so we have gone through a calculation of our compound interest and how our investing horizon can look like as we keep contributing over time. And remember to trust the process. This is why it's so important to build the vision to understand where you're getting to. In the beginning, it will seem hard to keep consistent to it, but trust the process. Over time, it will grow. Remember, don't try to chase the quick returns, the big reward. Don't give in to all the scammy things that you see online or everyone who's trying to rope you into starting trading, being more aggressive, buying and selling things quickly, shorting things. Don't chase the big reward. Some people will do very well and will hit it big, but it's like the lottery. Some people will ultimately win the lottery, but 99% of us will not. Over the long term, you will lose money. It takes up way too much of your time. Remember, we have other things to do. We want to put our time into what actually really generates money and increases our income. We want the building of our wealth, the investing side of things, to be automatic, to be simple, and to be reliable. So we chase the small but consistent reward. Because remember, the consistency, the 9% consistent over the long term, that's what really exponentially increases and grows our wealth. So in the next milestone 2, you will open a calculator for yourself to plan your own journey with compound interest. So this will help you define your goals for this course, and I'll show you how to do it. It'll basically be what I just showed you now, and we'll just go through a quick run through of it. All right, now, I think that's it. See you in the next lesson, and enjoy the next milestone.